The last time we chatted, we touched on the heightened activity the market was seeing on account of the potential delisting of Zain coming to the fore, and traders now pulling funds out of that counter and having to plow that capital elsewhere. Is that a trend that's still continuing?
Yeah, Alishia, it seems to be continuing, but it's slowed down quite a bit. You've seen activity in CEC and Zanaco, and also the prices sort of staying level and even coming down in the case of Zanaco. So essentially it seems to have slowed down.
Slowing down. As an investor in the market, where are you finding value right now? Because at surface glance, we've got PE ratios seeming to have picked up quite a bit.
Yes, they have, and well, it's become increasingly difficult now, to be frank, but there certainly does seem to be value, well, looking at it in terms of price earnings relative to growth expectations. And some of the numbers that have come up, despite the significant increments in a lot of the companies, there still might be room for further growth going forward.
Well, let's get into the detail on some of these stocks. We had African Explosives having lagged in terms of appreciation in the past. This year seeming to be seeing a changing of the tides. It's seen profits up for the full year up 57% or so. Its divvy was up 55%. What's your view on the counter right now?
Yeah, African Explosives is an interesting case. I mean, it's generally lagged over the past couple of years, and I think primarily that's because it hasn't been paying dividends. And well, with the first dividend payment last year, you sort of saw a carry-on in the price. And even though it's up about 93% year to date, there still might be upside potential. It's still at a PE of 7.65. The payout is relatively lower, and the growth seems fairly strong. On the back of mining activity, they are set to progress going forward.
Of course, this is a company with a direct link to mining activity, so underlying growth looking good there. It's been the best performing stock this year. Year-to-date gains up 90% thereabout. What are you making of current valuations, though?
It still looks positive. I mean, the other good thing is, ironically, most of the growth in AO is coming from exports. So exports into the Congo have gone up, I think, about 49%, whilst domestic growth is up 31%. So growth is actually being driven by exports, and that's partly because the kwacha is currently weak. But then also regional mining activities seems to be feeding off into the profits.
In the meantime, Standard Chartered recently released numbers. We had a huge spike in earnings per share coming through there. We saw a 70% rise in earnings, but you've been saying that we need to look beyond just the headline figures in Standard Chartered's case.
Yeah, true. I mean, what was a big issue, at least in the last 2 years, or last 3 years too, is that they had significantly high management fees, which declined quite a bit, and that's partly because the Reserve Bank stepped in and essentially barred companies from paying out management fees without provision or without going through the central bank. And you sort of saw management fees come down 88%, and that sort of spilled into earnings, and that was essentially what we were looking for. If you compare it, if you normalize the numbers with the same management fee, they actually aren't up significantly. But yeah, hopefully that's going to carry on into the price. It was a big concern with quite a bit of investors, and hopefully it will be a trend that will continue, because they seemed fairly high, especially relative to Zanaco.
So on account of reduction fees, then how does Zanaco compare here? Because looking at headline numbers, their revenues were up a more muted 17% for Zanaco specifically.
Yeah, Zanaco, interestingly, has got a bit of growth. I mean, its profits grew 42%, and that's without the discrepancy of management fees if you compare it to Standard Chartered. So they are getting quite a bit out of their Zapit, their new mobile banking, all of that, and that seems to be coming into the numbers. They recently announced that they'll be partnering with the post office to try and get more distribution out there. And the major concern with Zanaco was the strain that the additional customer base is going to add on. I mean, they're up literally 100% relative to where they were last year, from 200,000 to 400,000 customers now. And, you know, the concern was how much capex they need to get into. Are they managing growth? And they seem to be getting their numbers right. But looking at where the dividend lies, they still are being quite conservative, and they seem to be planning for quite a bit of capex going forward.
So some of the risk there lying in infrastructure possibly not keeping up with the kind of growth Zanaco is recording. In the meantime, BAT didn't do too well, slowing demand coming through there, and that many traders highlighting to be a function of illicit cigarettes coming into the country.
Yeah, that has been a problem for a while. Illicit cigarettes, well, they have been trying to lobby with the Zambia Revenue Authority, the tax authority here, to try and, you know, ranging from getting stamps and all of that, to try and curb it a bit. And the rationale was being, this tends to be a problem that happens when the kwacha is strong, because it becomes relatively cheaper to import. But then it seems to be a trend that has continued. There could also be, you know, that's obviously not the full story. Demand seems to have slowed down quite a bit, which again is a bit contradictory if you consider that agriculture has been doing well, so you'd expect more pull from that side. So yeah, it's a bit of a twisted dynamic, but based on the company's model, and given that they still relatively don't have much competition, hopefully they might feed off the growth that's going to come through in the overall economy.